present. Thank you. morning, Renee. Can you hear us?
Yes, I can. Can you hear me? Good morning.
One more time for me.
Good morning. Can you hear me?
So we can hear you now. Thank you.
Awesome.
Check. Check.
Hi, everyone.
Good morning.
Good morning. Just want to make sure you can hear me okay.
Chairperson Miller, the trustees are present. The time is 9:01. We're ready for you to start at your discretion. Once the meeting has been called to order and the official roll call has been taken, I would like to take a moment to review the meeting guidelines. Thank you.
At this time, I'd like to call this meeting of the Arizona State Retirement System Trustees to order, and please call the roll.
Will the following individuals please confirm they are present at the meeting by stating here, as I call your name? Mr. Michael Miller,
Here.
Ms. Sarah Weber,
Here.
Mr. Tom Connolly, Dr. Chuck Essex,
Here.
Mr. Renee Guillen,
Here.
Mr. J. Kunis,
Here.
and Miss Ashley DiMaggio Reese and Miss Diane Landis are both excused. Chairperson Miller, a quorum is present. And now I'd like to read the meeting guidelines, please. This meeting is currently being recorded. All speakers, please remember to identify yourself before speaking. Unless you are speaking, all mics should be muted to eliminate background noise. All cell phones should be set to silent. Once motions are made, I will take the vote by roll call. Once completed, the chairperson will announce whether the motion is passed. This will ensure it is clear to the public how each trustee has voted and that the minutes are documented accurately. All presenters, please refer to the page numbers of the packet found in the upper right-hand corner of each page as you move through your presentation so that attendees can follow along. If any members of the public wish to speak, you'll have the opportunity under the call to the public agenda item number 10. As a reminder, if a trustee needs to leave the meeting early, please be sure to verbally indicate when you leave for the record. Thank you, Chairperson Miller.
Thank you. I just have an opening remark. It's to give ASRS kudos. Earlier this week, I was with a friend of mine who's also a retired member, and he wanted to make certain that I knew, because he knows I'm on the board, that he'd made a phone call to our call center to find out something regarding an insurance question. And the person who answered, he remembers her name was Kay, and was like right there. And he was very impressed. And it was an insurance, and she put him in touch with a person from United Healthcare, and they got it resolved. So, you know, again, kudos to our call center and how efficient and fantastic it is. And I just wanted to make certain that I passed his thank you on to all of you. So thank you very much. Okay, with that, we now move to agenda item number 2, the consent agenda. Do we have a motion to approve the consent agenda?
Tom Connolly here. Mr. Chair, I move that the board approve the consent agenda.
Do we have a second?
Mr. Chair, this is Sarah Weber. I second the motion.
Hearing a motion by Mr. Connolly and a second by Ms. Weber, I will take a roll call vote for the motion to approve the consent agenda. Please answer aye or nay when I call your name. Mr. Miller,
Aye.
Ms. Weber,
Aye.
Mr. Connolly,
Aye.
Dr. Essex,
Aye.
Mr. Guillen,
Aye.
Mr. Petkunis,
Aye.
Ms. DiMaggio Reese and Ms. Landers are both excused. Chairperson Miller, the vote has been taken.
Motion passes unanimously. With that, we now move to agenda item number, oh no, I'm reading the wrong thing here. I'm sorry. I was going to jump to 14. Agenda item number 3, presentation, discussion, and appropriate action regarding the ASRS 2026 legislative initiatives and legislative update. And I bet we roll it to Jessica.
Thank you, Mr. Chair, members of the board. For the record, Jessica Thomas, Legislative Liaison and Rules Writer for the Arizona State Retirement System. We have 3 initiatives this year, and they are all moving very well. House Bill 2089, 2090, and 2092. The first one relates to the Health Insurance Premium Benefit Program. The second relates to the Long-Term Disability Program. And the third relates to membership eligibility waivers. All 3 have been passed by the House, and they are scheduled to be heard in the Senate Finance Committee on Monday. With that, I'd be happy to answer any questions. If not, then I will let you know about a few other bills that are moving that are not ours.
Good, because that leads to what my question was going to be.
Okay, wonderful. So a few bills that we have on the tracker. We have House Bill 2502, which is related to elected officials. That is allowing elected officials to retire without terminating their elected official position. That has passed the House Appropriations Committee, and it is just waiting to go through the House Rules Committee. We also have a Senate Bill 1503 related to proxy voting. That passed the Senate Finance Committee earlier this month. It is waiting for the Senate Rules Committee. We have expressed concerns to the sponsor on that one. We also have Senate Bill 1042 relating to a cryptocurrency cap. So it would allow pension systems to invest in cryptocurrency, but if they did, then they would be capped at, I believe, 10%. We have not taken a position on that bill. We're just tracking it. And then there's another House Bill 2809 related to cybersecurity. It's a statewide cybersecurity measure. We are currently researching that bill. It passed the House today. So I would be happy to answer any questions.
Well, my question was, you kind of addressed it, but I'll even ask it. Are there any other bills out there that would have potentially a negative impact on ASRS?
Mr. Chair, thank you. There are several bills. I don't know if anyone else is following the legislative session. This is one of the most robust legislative sessions we've had in history. There are over 2,000 bills and legislative initiatives this year. So there are quite a few on the bill tracker that we are watching. These are some of the more significant ones. So I will definitely keep you guys updated as these progress.
Appreciate it. Any other questions?
I'll just try one quick comment, if I may.
Absolutely.
With Senate Bill 1503, that's the proxy voting bill. We're still conducting research on that, but that is the one that is got most of our focus right now. There's an apparent intent to focus on the what's in the best financial interest of the members. That's the apparent attempt. When we look through it, we're concerned that that not be the result of the bill. So we're in the process of researching that and reaching out to the drafters to have dialogue. Thank you.
Thank you. Any other questions? Well, with that, first of all, thank you very much for everything that you do with the state legislature and keep us informed. And I don't envy your position. Thank you. Okay, with that, we move on to agenda item number 4, presentation, discussion, and appropriate action regarding NEPC investment reporting, executive summary, and the investment committee presentation. And I'll bet Ms. Dean's going to lead us here.
Good morning. So I'll be presenting to you the third quarter 2025 investment oversight report. I know that sounds like a long time ago, but we want to make sure that the board does fulfill their fiduciary duty of monitoring the fund performance, but I will provide some updated market information for the full year 2025. If we can move to page 30. Perfect. So if you look at the overall year-to-date column, that is representing the full year 2025 market performance. Short story is that it was another banner year for the stock market. Fourth quarter was a little bit more volatile with some rotation out of tech and growth stocks into value stocks, but overall the market was up another 2 to 4%. And we ended the year close to 18% return for the S&P 500. You'll note here that it is the third year in a row where the S&P 500 had an outsized return, 2023, 2024, both in mid-20s returns, and now 2025. What really stood out in 2025 was the international stock market returns. The international developed market return, represented here by MSCI EAFE, was up over 31%. And then the emerging markets stock market was up over 33%. Now, for example, MSCI Korea was up over 76% in just 1 year. So it has been a banner year for global stock markets. So overall, all the asset classes, including fixed income and commodities, had a very positive year. If we turn to page 31, all the bars are positive, with the exception of that US dollar column you see on the very right. We continue to see weakness in the dollar. This was an additional boost to the international stock market returns, given that we're probably on a rate cutting path going forward, and there's some fiscal challenges that continue to remain. We don't see that there's a lot of forces that will reverse this weakness in the US dollar, and that will be something we'll be watching closely. If we turn to page 34, in terms of the fundamentals of the US economy, it remains relatively solid. The third quarter GDP growth was 4.4% year over year, but we just got the fourth quarter number, which wasn't quite as strong, 1.4% year over year, but that was negatively impacted by the government shutdown. Overall, as you can see here, the drivers of GDP is still strong consumption by consumers and corporate spending as well. So there seems to be some solid fundamentals going into 2026. If just on the next page, an interesting source of this economic growth is AI-related spending. This chart shows a percentage of all non-residential construction in the US. such as data center in terms of AI spending was over 40%. And you can see how quickly that has escalated in the past couple of years. So that was 2025. Just a quick comment about what we're seeing year to date in 2026. It's been a very volatile market, not the least of it due to tariff policy uncertainty, but also jitters in the market about AI disruption in the software sector. So we've seen a big sell-off in that industry, but the equity markets are still positive territory so far year to date. It does seem like the market is looking for reasons to sell off given the extended valuations. So we are seeing some very volatile, outsized moves day over day in the stock market so far year to date, and we'll keep you posted. Unless there are any questions, I'll turn to the oversight report for the third quarter performance.
Trustees, any questions?
Perfect. We'll turn to slide 40. Hopefully you're familiar with this page by now. This is a summary of your ongoing objectives and the scorecard as to how the portfolio is meeting these objectives. We're showing here Q3 as well as Q2 so that you have a comparison to see if there were any changes. Very, very consistent story. Where the objectives were met, you can see is the same between quarter 2 and quarter 3. Again, where the objectives were partially met, same story. And the big picture is that over the longer term, all your objectives are being met. But on the shorter term, due to the strength in public markets, your private markets performance is only being partially met. And I'll go through the details of these performances. But as of now, there's no action recommended for the board, and we don't have any concerns about the portfolio implementation. Before we dive into the numbers, if we go to the next page, I just wanted to touch on the new asset allocation that went into effect starting the fiscal year in Q3 2025. You see the new asset class targets that were approved in May of 2025. Just as a reminder, private equity was increased from 10% to 13%. Credit was reduced from 23% to 22%. And then real estate was reduced from 17% to 15%. So your 20-year expected return based on that 2024 capital markets assumptions used to conduct the asset allocation study was 8.4%. The end of 2025 capital markets assumptions here that you see 20-year returns is a bit lower, but that is not accounting for ASRS specific portfolio. This is just our beta assumptions. And then also that's not taking into account the RCLCO real estate assumptions. But as you can see that these return expectations are all above your assumed rate of return. Moving to page 42. So third quarter return, you see there is another strong positive one for the total fund performance on an absolute basis with a return close to 4% for just that one quarter. Year to date, the return was 10.55%. Again, this report is very similar to the second quarter one in that the portfolio underperformed the benchmark in the shorter term on a time-weighted basis, so 1 year and 3 year period. But you can see that longer term performance, you are actually nicely outperforming the benchmark, your objective number 3. More importantly, however, if you look at that absolute level of return that the portfolio has generated, you can see that across all time periods that are being shown here, the portfolio is able to reach a return well above your assumed rate of return. And then lastly, if you look at that number next to your return numbers in the parentheses, that's the ranking of your return amongst your peers. And you can see that the ASRS portfolio ranks in the close to or in the top decile in the peer universe for longer term periods, 5 years and longer. And if you look at the median fund performance, you're also significantly outperforming the median fund return. So you're meeting your objective number 2 as well. On page 45, I always like to put your returns in the context of how volatile those returns were. And we'll just take a look at the 5-year statistics. The portfolio returned 10.19% annualized over that past 5-year period. And you've exceeded the benchmark return of 9.69%. And that return performance is in the top 10th percentile among the public fund peers. That median fund of your peers during that 5-year period was only 8.94%. So again, you were significantly outperforming the median fund. And if you look at that second column, which is showing a standard deviation, which is a measure of how volatile your returns have been over that period, and that volatility was 6.68%. which also puts the fund in the top 10th percentile in terms of how low your volatility was compared to those of your peers. And that Sharpe ratio sort of puts that into context, what the portfolio was able to generate per unit of volatility, which is again significantly better than the median fund's Sharpe ratio. So putting your performance in the context of how much volatility was involved in generating that return is a good way to think about the potential of drawdown during this period that you were able to mitigate and achieve that level of return. On page 49 is your asset allocation compliance. Just quick snapshot of your positioning. First, at the end of the third quarter, the portfolio value was at $61.9 billion. And that's a $2 billion increase from the end of 2025 fiscal year or just a quarter ago. So very strong quarter. And at the end of the third quarter, all asset class allocations were within the allowable range of the newly approved asset allocation target. You are slightly underweight credit and interest rate sensitive asset classes, but overall, everything is in line with your allowable range. I'll turn to page 52 to look at your money weighted return for private markets. I mentioned that on the time weighted basis, the 1 and 3 year returns for private equity and credit asset classes were underperforming. But it's important to look at your private markets performance by the metrics that are more appropriate, which is the IRR or the money weighted return. And these are the new benchmarks for private equity and credit asset classes, which is a peer group based benchmark. So the private equity and credit asset classes did underperform the peer universe in the shorter term, but they do show an outperformance since inception across the board. And it's important to keep in mind that the role that these asset classes serve is to help the portfolio achieve the level of return, your assumed rate of return. And if you look at that longer term performance, you see that private equity is generating double-digit returns. Credit is generating high single-digit returns. And this is exactly what you would expect for investing in these asset classes. And they've been additive to achieving that assumed rate of return. Lastly, I'll turn to page 49. This is the summary of asset class committee meetings that took place during the third quarter. There were 9 asset class committee meetings during which 6 private equity recommendations were approved. 1 credit recommendation was approved, 3 real estate recommendations, and then 1 public equity internal management recommendations were also approved. So overall, we're monitoring the portfolio in this volatile market environment, but we do not have any concerns at this point. And I'll take any questions you may have.
First of all, I'll just jump in and thank you for positive news. That's always a good thing to receive. And thank you for your oversight and everything that you provide for us here on this board.
Sure.
Trustees, any questions or clarifications needed? Not hearing any. Thank you very much for your time, and I'm glad you were here. Next on the agenda is agenda item number 5. Presentation, discussion, and appropriate action regarding the ASRS investment program, executive summary and investment committee presentation. So, Mr. Rattari, I bet you're going to take off.
Thank you, Chair Miller. Members of the board, good morning. For the record, Michael Vitteri, CIO. We will, given that half of you have seen these materials in length, and we basically distributed to everyone, so this might be the second or third time you've seen it. I'll keep my comments brief. At a high level, half the assets we have are public assets. The other half are private assets. So the public assets we have are public equity, as Rose indicated, 44% target on public equity, and fixed income, what we call interest rate sensitive. So that's a 6% target. With respect to public market assets, we manage, if not more than half, but almost all, depending on which one of those two asset classes you're talking about. So we can go to page 68. I apologize, I'm going to be bouncing around a little bit just to get to these high-level comments. Page 68, please. Thank you. With respect to public equity, we manage about 65.6% of the total public equity assets. So that's US and non-US. So we're managing all the US assets internally. That represents 65.5%, 65.6% of the total public equity exposure. The rest ends up being non-US, which is developed market, and customized emerging market portfolios. Those are being managed externally by passive or enhanced passive providers. What we've done for years since the beginning of managing assets internally, and it's going nearly on 30 years now, the goal over most of that time has been managing the portfolios with an enhanced index methodology. And you'll see the performance or the excess returns bears that out. 1 year, 3 year, 5 year excess returns, let's say 25 basis points or more, and the same thing since inception, 27 basis points. The 10 years, the only anomaly there. There was a period of time in which there was an attempt to do factor investing, not only with the external managers, these would be active strategies, but also factor strategies internally. That was turned off about 7 years ago, and you'll see kind of the performance attributed to those types of strategies are still captured in the 10-year number. We expect that 10-year number to decrease over time. Yes, sir.
I think we've got a question up here.
Oh, sir.
Yes, earlier the director talked about some legislation involving proxy voting policy that might affect our proxy voting policy. Can you refresh my memory at this point, since we are managing domestic public equities in-house and going to take over ex-US, what the current proxy voting policy is on the equities that we're overseeing?
For the non-US equities?
Both.
For both. Right now, I think Robert's online. So Robert ends up being our proxy voting guy, but I believe we end up utilizing ISS, International Shareholder Services.
So, Mike, can I jump in?
Yeah,
So for our US equities that we manage internally, we work with Glass Lewis, and they offer several flavors that you can choose from. And we just go with their standard offering, which, they put out maybe an 85-page document about how they decide different votes, but basically it's the one where they're voting in the best interest of the shareholders. We haven't chosen a ESG focus or social investment focus. We're just going with the standard offering from Glass Lewis. And then for non-US equities, currently our managers handle that proxy voting. So that's both BlackRock and Legal & General.
Will you do the same thing you're doing for domestic equities as you bring the foreign equities
Well,
in-house?
We'll be consistent with the providers. So there's only the two big providers. I mentioned ISS and Glass Lewis. I mistakenly said ISS. We utilize ISS for something else, but we'll use the same type of proxy voting guidelines that are in place for what we have.
Great answer. Thank you.
Thank you. So back to page 68. So again, I was just finishing off on the 10-year numbers being the factor strategies that we utilize internally and externally at that time. We expect that number to decrease over time. It'll take some years, but the negative performance, excess performance at the 10 years will go away over time. We turn to the next page, page 69. So a little bit of a busy chart here, but if you look down at the middle, upper left panel, that's where I referenced the 65.6%. That is what's managed internally of the total public equity book. That's what's managed internally. Everything else, you'll see that at least on the upper right-hand side, you see that ASRS tracks the benchmark pretty closely. It looks almost like an index, and in fact it is. It's kind of an enhanced index strategy. So again, we're attempting to outperform by 25 to 30 basis points on a yearly basis, and that compounds over time. We employ the same type of strategies on non-US. It ends up being enhanced or enhanced index. And the goal again is to also achieve those types of excess returns. If we turn to page 90, please, we're talking about the other public asset that we manage internally. So this is fixed income, but what we call interest rate sensitive. So you'll see here, the performance has been page 90 when you get the chance. Sorry. You'll see that the performance has been similarly consistent. So enhanced indexing, the strategies tweaked over time, but most recently we've converted the portfolio from what used to be called Lehman Brothers aggregate, it's now Bloomberg aggregate index, switched it over to a treasury portfolio 3 or 4 years ago, but we still end up having the ability to add value. And the way we do that currently with our treasury portfolios will allow credit into the portfolio up to 20%. So we'll take some views on certain credits in order to achieve an excess return. So again, that return enhancement's been consistent over time and really since inception of these portfolios. So again, steady 80 right at 20%. If you look at the blue pie chart down below, see that of the total interest rate sensitive portfolio, 97% of it is managed internally. So we still have an external provider that manages 3%. And that we use, so we'll probably always have an external provider. It's always good to have a backup. We end up having flows, we can take money from them, or we end up wanting to give them money in case we end up getting busy with something else, or heaven forbid, we no longer have an internal rate sensitive portfolio manager. We'll need to step away to someone else for a little bit until we can bring it back. So those are always good optionality to have within the portfolio. If we turn to we turn to private markets, which is the other 50% of the portfolio. So as Rose indicated, we'll start with private equity first on page 11. Private equity represents now, the target is 13% of the portfolio. That went up the last strategic asset allocation, asset liability study from 10 to 13%. Page 11, please. I'm sorry. Sorry about that. Let me get to it. Page 73. Sorry about that. Page 73. Performance on the portfolio, you'll see the excess performance on the 1 and 3 year basis has been under expectations. 70 basis points on performance on the 1 year, 7.47 on the 3 year. Combination of a bunch of different things, but you'll see at the 1 year it's coming back in, and on a go forward basis we're seeing returns, or at least our implementation of this asset class being pretty robust, and we expect to see excess returns going forward. 5 year, 10 year and since inception, excess returns well above the benchmark. Turn to page, this would be, I apologize. Turn to page 76. I want to point out the fourth bullet point. One of the ways that we differ a little bit from other peers is we're not just investing in public equity per se, in large market buyout, but we also have a pretty significant allocation to co-invests. But most recently, on the fourth bullet point, we've also been investing in secondary markets. So secondary markets allow LPs and even GPs the ability to sell their shares in private equity funds. So there's a lot of public pension plans, a lot of endowments and foundations that got in over their skis over the last few years. They're over allocated to private equity. They need to rebalance, and they feel the need to kind of go out and sell it into the secondary market. So my old peers in the Pacific Northwest, really huge allocation. They've been consistent sellers in the secondary market. You're seeing endowments and foundations also doing the same thing. So we are opportunistically buying those if we see that they're a good GP, a good fund, and available at a nice discount. So that's one area we're getting into. The other area which we started getting into, this will be the following page, page 77, is co-invests. The goal for co-invests is 30% of the overall private equity portfolio. So 30% of the 13% will be co-investment. Right now, we're probably about a little more than halfway there on the co-invests. We're being thoughtful, we're being methodical about how we get into this, and we're rallying up into this. And that's been a fantastic asset class or sub asset class within private equity. It's been very accretive to returns. So we'll continue to do that. And again, the GP or the specialty manager we utilize in that is JP Morgan. That's public knowledge. They're able to, with us, determine which co-invests we want to invest in that come from our own GPs. But we also have a look into JP Morgan's extensive GP lineup. So anytime there's any co-invest opportunities come from there, we also have the opportunity with JP Morgan to invest in those. So it creates a pretty diversified co-invest portfolio. So if we turn to we're going to real estate now, page 79.
Mr. Chair, I've got one quick question for Mike. If I may.
Go ahead.
Thank you. Mike, when you said on the secondaries on the PE side that you're seeing a potentially pretty significant discounts to the mark-to-market value, what kind of discounts are you seeing that become compelling when you're buying those secondaries on strong performing, GPs?
Well, if you caveat with strong performing, the evaluations may not be as attractive. I've seen discounts of 30%, 35%.
Okay.
I would say that the secondaries we're looking at, they're probably at least a 10% haircut.
Okay, got it.
About a 10% haircut. And that's pretty reasonable because they're pretty well known. They're good GPs. We're able to, or with JP Morgan's able to look to see what's exactly what kind of portfolio holdings they've got left, portfolio companies they have left, and we're able to kind of forecast on a go-forward basis. So it's a pretty good pickup. And there's no investments in those, right? Those just kind of throw distributions off and throw cash off.
Got it. Thank you.
Thank you. Next, we're going to real estate, page 79, please. So again, real estate has performed extremely well on a relative basis. You'll see the returns down below on a 1, 3, 5, 10, and since inception basis, ranging anywhere from 350 basis points outperformance to about 10 basis points outperformance, but outperformance nonetheless. The asset class itself has been challenged. You'll see returns on the 1-year basis, positive 2.76, 3-year basis, negative 2.58. And then on 10 years, 6%. So real estate hasn't given us what we expected it to give us, let's say about a steady 88%. But nonetheless, it's been a diversifier for the portfolio. And the outperformance, the implementation of real estate by ASRS, the outperformance has been pretty impressive. Next page will be page number 15. Thank you very much. You'll see the yellow magenta lines distributions have peaked up over the contribution. That's one way we were able to get from 17% to 15%. There's been plenty of opportunity to sell good asset classes that have been, good assets that have been stabilized, that have been attractive in the market, and we've taken those opportunities to do that, just sell while we can, and sell while the selling opportunity has been good. We turn to page 82, just highlighting the positioning within the portfolio. We're overweight in residential, so this would be multifamily, development to multifamily throughout the country, and we're overweight in other. The other would be data centers, hotels, and mixed-use assets. We're underweight industrial, underweight office, and underweight retail. And then finally, if we can go to credit, page 85. Similar to private equity, there's been performance headwinds at the 1 year and 3 year basis with underperformance relative to the benchmark, and the benchmark has changed. Changed the benchmark last year. 1 year underperformance of 4.58 and then 4.7% on the 3 year basis. Outperformance beyond that, 5, 10, and since inception. We still believe credit is a fantastic asset class. We believe that implementation of credit in separately managed accounts is the way to go. A lot of the problems that you're hearing in credit that have come up, I would say the last 2 weeks in the Financial Times, Bloomberg, Wall Street Journal, reference the shoddy, or I'd say lack of due diligence in some of these deals. That's been happening in the broadly syndicated loan market, and we don't invest in that. That's kind of the publicly traded aspect of credit. So all our assets are predominantly in separately managed accounts in which our GPs can do extended due diligence. They do significant due diligence, and it's not and at a contract, at a covenant level that's significantly higher than the broadly syndicated loan market. And then finally on page 87, you'll see again here the magenta colors on the distributions on credit. Credit's been a positive contributor since 2003 of cash, 2003, 2004, 2005. In fact, ASRS hasn't had to raise cash from public markets for almost the last 2 years. It's been really from the cash flow that's come from credit, from real estate, and to a certain extent, private equity. Last page ends up being page 99. And this is the preliminary total fund summary. So this is as of January 31st, 2026. At this point, we have $63.4 billion in assets. On a 1, 3, 5, 10, and 20 year basis, and since inception, you'll see the top line total plan. We've exceeded the actuarial rate of return. So 1 year, 12.62, 3 year, 9.99, 5 year, 9.11, 10 year, 9.5, and so on. So exceeding the actuarial assumption rate. If you look at the excess returns, again, we're challenged a little bit of headwinds really because of credit and private equity. Negative excess performance on the 1 year and 3 year basis, but positive thereafter. We look forward to seeing you at the next investment committee meeting.
If I may make one more comment.
Please.
Just as a reminder, I think it's very important, Mike noted a benchmark change. Benchmark changes are going forward. We're not changing historical benchmarks. So the new benchmark adoption that happened at the beginning of this fiscal year will be going forward. So the historical performance of your goalpost does not change.
Thank you. Trustees, any other questions? Not hearing any. Thank you very much for your presentation.
Thank you, sir.
Like I said, I always like good news. So this time we move on to agenda item number 6. Presentation, discussion, and appropriate action regarding risk analysis and investment compliance. Executive summary of the investment committee presentation. And I bet Mr. Butler is going to jump in here.
Yes, thank you. For the record, Robert Butler, Investment Risk and Compliance Officer. I will start on page 101. And like the previous presentations, some of you at least have seen this information before. It was presented at the December 17th investment committee meeting. So I'll go rather quickly, but please do stop me if there's any questions. And then I will move forward a slide to page 102. I think everyone has seen this before. It's our correlation matrix. I like to point out here that green is good, meaning sort of more diversification benefit. And you'll notice while we're not super excited about interest rate sensitive from a return standpoint, it is a useful asset class for us in that it provides diversification as well as some, cash when we need it and lowers the overall volatility of the portfolio. Move forward a slide. And here again on the left, we show the dollar amount by percentage invested in each asset class. On the right is the contribution to volatility. And you'll see that equities, both public and private, contribute a higher amount of volatility to the portfolio compared to the sort of diversifying asset classes of interest rate sensitive and then somewhat credit and real estate. But as I pointed out before, and will sort of come into play in an upcoming slide, this is a lot less contribution to volatility than a 60-40 plan, 60% being equities, 40% bonds. When you run that analysis, it's actually more like 99% of the volatility comes from the equity sleeve. So then to move, I'm going to skip page 104 and go to page 108 on the hypothetical stress test. And there's a great picture of me, but back to, I guess I have the numbers wrong. Apologize. Page 105. There you go. Thank you. You don't have to look at my picture anymore. So some of this may be new. Starting at the last investment committee meeting, I got rid of a few of the stress scenarios that weren't actually that stressful to kind of make the slide a little bit cleaner and, I don't know, focus more on bad past scenarios just for their, I think, information content. And then added a second comparison line, which is that 60-40 portfolio. And you may notice that often the 60-40 portfolio loses less / performs better in these stress scenarios due to having such a large allocation to bonds. But I am not making a recommendation that we adopt a 60-40 portfolio going forward. If we had done that to lessen the impact of these events, the trade-off would have been a lot lower returns over the last few decades. But any questions on that slide?
Not hearing any.
All right. And then quickly on page 106, it's a summary of our largest external managers. The public managers, BlackRock and Legal & General, I mentioned earlier when we were talking about the brief proxy voting discussion. And then you'll see that we have kind of a larger concentration in the managers we work with in both private credit and real estate. And then I'll end quickly on 107 and just want to get everyone very excited. In case you forgot, at the next investment committee meeting, I am doing an additional report where we're doing kind of a deep dive on the private markets investment compliance program. And I'll be joined by both RCLCO and Makita. So I hope everyone is looking forward to that. And thus concludes my prepared remarks.
Mr. Burke, I just have one question for clarification. I know, and my memory may not be accurate here, but as I recall, there was a push to potentially remove us from Blackstone. Is that correct?
So that doesn't ring a bell with me. But and I don't know if there's confusion between BlackRock and Blackstone. I know we had the people joining us at the meetings in the past. They seem to get those two names confused a lot, but I'm not aware of any sort of effort to, I don't know, remove from Blackstone.
Yeah, I could well be wrong, and I probably have inverted the names. So I just wanted clarification on it. That's all. Thank you. Any other questions? Okay. Not hearing any, we will move forward to agenda item number 7. Board chairperson announcements regarding committee membership makeup for the ASRS Investment Committee. And Paul, make certain that I'm on the right track here. I believe that the investment committee should be Chairman Trustee Pacunis, Vice Chair Tom Connolly, and Member Renee Guillen. Is that correct?
Yes, that is correct. And then by way of background, of course, we had Trustee Landis on that committee,
Right.
or you had Trustee Landis on. And she has indicated she is now chair of the appeals committee.
Correct.
She wants to focus on that and then focus on broad board policy issues. And she was also, as a compliment, very positive that we have both Trustee Petkunis and Trustee Connolly that are investment experts on that committee. So that was the background to her request.
Okay.
Thank you.
So that's what we'll have. And then update me. This is my first time in this position dealing with this notice of the upcoming board elections. That takes place in the November meeting?
The next board meeting,
Next month?
correct? Next board meeting.
Okay. So that's what we will do.
And I'll just add one quick thing on that topic was it is formalized in our governance handbook to officially do it every year. And the reason is it is the belief of the governance handbook that it is more effective to affirm chairmanship rather than have a chair maintain a position perpetually almost, and then it looks almost frictional when there's an election to have. So we've seen in the past in other organizations where someone maintains a position and it goes on for over a decade because no one wants to take the initiative. This way there's affirmation going forward, and each time the board thinks through the chair position. Thank you.
Thank you, sir. And agenda item number 8, summary of current events. I know I don't really have anything. Do you, sir?
I do. I have very important current event. It's happy and sad at the same time. So we've got a long-term employee of the Arizona State Retirement System. I think everyone knows who she is, but I'm nonetheless going to ask Martha, would you put your hand up so that we all know who Martha is? Okay, I'm going to walk through a few comments I'd like to make about Martha. She is retiring, and her last day at the state retirement system is this Friday. Her career started with the Arizona Department of Liquor Licenses and Control. She worked there for approximately 8 years. After that, she worked for the Arizona Residential Utility Consumer Office for approximately 2 years, then the Department of Economic Security for approximately 10 years. And then the pinnacle, in my opinion, of her career, 25 years with the Arizona State Retirement System. So she has dedicated this almost 100% of her career to the state. She has, I think, a couple of private sector engagements. I think the Gap, if I recall, you worked at the Gap for a short period of time as well. But she has dedicated her career to the state of Arizona and is a new resident to the, no longer new, but is a new resident and citizen of the United States and resident of Arizona. I've seen some of the things that she's built. Makes it better for everyone, including the people that move here. Martha started with the Arizona State Retirement System in September of 2001. So that was right before 9/11. And one of the first things that she was tasked for when she started as the Chief of Administrative Services was security of this building. So she engaged an outside consultant, worked around, made sure that we had confidence that we could secure our members and our staff. Some of the other notable things that Martha has accomplished at the Arizona State Retirement System include the following. Managing a very complex budget process that enabled us to create what is now an outstanding member advisory center. Some people call it a call center. It's much beyond that. It's a member advisory center. That began when Martha started. She worked to ensure that we had budget so that we could create that. And we actually started it with temporary employees. But because of some of her work, we were able to create it and move from a temporary workforce to a permanent workforce. And now I think we have not just one of the best member advisory centers, at least a third of this agency is run by people that came in through our member advisory center. She also facilitated a $45 million information technology budget to create what we saw at the last ad hoc board meeting, our pension administration system. That was risky, and that was big for this organization, creating a pension administration system. And I remember when I started here, my former colleague, the former deputy director, he used to come into investment meetings and he'd say, "You guys know stuff to like 2 decimal places." And he'd say, "I don't know what's going on. I don't know how many calls we got today." And he looked at Martha and a couple of his information technology colleagues and said, "What do we do?" And they created a pension administration system. Now that I've had colleagues of mine say, "Should we sell it or lease it to other state agencies?" And that is something that was recently brought up to me. We might engage in that dialogue this quarter. So Martha facilitated a $45 million information technology budget. Next, she led to the digitization of the procurement and human resources files. She worked with the state procurement office to get a delegation of authority for procurement at this agency and makes things smoother. We have colleagues now that are dedicated procurement officers so that we work within ourselves with certain statutory policy limits on what we can procure. That was fundamentally accomplished with Martha. And when I asked Martha about some of her accomplishments, I'm going to read what she responded to. She said, the best accomplishment ever at the Arizona State Retirement System was the amazing team of professionals she has in the Administrative Services Division." So her compliment was to her team, not to herself, of what she had accomplished. Terms I would use to describe Martha would be honest, professional, enthusiastic, a great listener, and an upstanding character. I want to mention a little bit about her volunteer work. One of the things she does outside of the Arizona State Retirement System, she is a force in the credit union movement, both in Arizona and outside. She has served as a chair of One Arizona Credit Union. She's been a past chairperson. She currently is chair of the Enterprise Risk Management and Compliance Committee. She's currently the chair of the, serves on the Governance and Finance Committee. She also serves on the philanthropic part of that organization called the One Arizona Credit Union Foundation. She serves on the Western Credit Union League of Credit Unions. And she has worked with the credit union movement in countries that include Kenya, Ghana, Barbados, Costa Rica, Brazil, Guatemala, Peru, and St. Lucia. She is well known in the credit union industry. She has even had an article published in the Credit Union League magazine in Peru. She's bilingual. And in 2020, she was nominated to the Women Achievers of the Year Award. Her person, who she is, she's got a wonderful husband who I've met multiple times, wonderful man named Craig, 3 wonderful sons, 3 wonderful daughters-in-law, and 6 wonderful grandchildren. She has hiked Mount Kilimanjaro with a coworker of ours, a former coworker of ours, Mount Kilimanjaro, over 19,000 feet elevation above sea level. The future, Martha, I know, is going to continue with her volunteering work with the credit union world. She is going to teach Spanish to adults, I believe, adult teaching of Spanish. Yeah, teaching of English for Spanish speakers, adult Spanish speakers. And she's going to have a happy and loving life with her family. So what I would like to do on behalf of the state of Arizona, the Arizona State Retirement System, ASRS staff, I would like to thank you for all that you have accomplished to make Arizona such a wonderful place to live. And we wish you a fantastic future full of new successes and new rewards. So thank you, Martha. And one final thing, I don't want to let it go, from the governor of Arizona. Be it known to all that Martha Rosen is awarded this certificate of recognition for her dedicated service to the state of Arizona. You have earned the respect of your friends, family, and peers. Absolutely, your friends, your family, and your peers by proudly serving the people of Arizona and the Arizona State Retirement System. The commitment you have devoted to your work for Arizonans is greatly appreciated. On behalf of the citizens of the state of Arizona, I, the governor, thank you and commend you for your admirable service. Best wishes for a happy retirement and success in all future endeavors. So once again, thank you, Martha. And thank you for allowing us to make that presentation. She's been a fantastic asset to the state.
I can't disagree in any way, shape, or form. Absolutely. Absolutely. And again, congratulations, Martha. Well deserved. So now we go to agenda item number 9, supplemental operations reports for possible presentation, discussion, and appropriate action. And I will turn this over to Director Mattson.
I have no additional comments to make. Thank you.
Okay. And then we can move right on. Takes us to agenda item number 10, which is a call to the public. Do we have any people to speak?
No, we do not.
Then that takes us to agenda item number 11, board member, executive director request for future agenda items. So trustees, are there any future items that you wish to place on the agenda?
Mr. Chair, at some point in the general board meetings or the investment committee meeting, I'd like to have a refresher on securities lending policy. Just an update,
Yeah.
if that's not
Yeah.
already scheduled.
No, that excellent. If you want to go back to the agenda item with respect to some of the current events, I can give you a really quick update. Securities lending, we do engage in securities lending. We have 2 parts to our securities lending program. One is internal assets, and one is external. It's broken up, bifurcated into 2 parts. There's the public and the private. Privates are not securities lendable, publics are. Publics, we have a 90-10, or we have a split with a custody bank. And with the external party, it is their relationship with the custody bank. So just high level to answer the question, and we can go deep dive into that. That's an excellent topic, so thank you.
All right. That takes us to agenda item number 12. The next regular public ASRS board meeting is scheduled for Thursday, May 21st, 2026, right here in this boardroom at 9 a.m. And presentation, agenda item number 13 is the presentation, discussion, and appropriate action regarding the board governance evaluations. I believe, first of all, trustees, you have an updated copy of the evaluations that were received.
I'm gonna now ask my colleagues, we finished the formal part of this presentation, myself and my colleagues, if we can depart, and lots to do. Thank you.
Thank you. I just kind of, I'll put this off with kind of a general comment. First of all, I believe it's very, very important that each board member fills this in. And I also recognize that this year, I will call this a transition year where we had board members and then 2 new board members. Mr. Connolly and Dr. Essex join us. And I'm not sure you were on board real long to be able to do this. So I'm not surprised, but I do appreciate all of your input as well. And obviously, when you look at the scores on here, and I think in my mind, in a sense, it's real easy to just go down the list and put 5 straight down. But I caution us for doing that because we always need to find some way to improve and keep moving forward. And I realized in part of my mind that what makes that difficult is just with the idea that the ASRS excels at such a high level. You kind of wonder, how can we keep improving to a certain extent to maintain that high level? So, and there's a lot of comments on here that I think are excellent. And I'm just looking for some input and reaction from trustees. So, floor is open. I hear silence.
This is board member Tom Connolly. I've only been here a few months in the year, but from what I can tell, things are running at least as well, probably better than my previous term on the board. So this is easy duty in that respect as a board member, and I really appreciate the organization's efforts. It's pretty amazing to see the high standard has been maintained and improved over such a long period of time.
I will agree with this and I've been on the board for a while, and each year has gotten better and better and better. And each year not only getting better, but at a higher level of standards. And I just come away in awe of everything that ASRS does, all the employees do. The brain trust that oversees this. It's just interesting. One little sidebar that kind of supports the call center in particular. I just had a recent doctor visit, and it was with a doctor with Honor Health. And of course, as soon as you see one, they immediately send you a survey. It's like, really, another survey? And matter of fact, I just filled it in early this morning before I came down here. And this time on their survey, they had a question about their call center, which I think is terrible, candidly. And it takes you forever to get through a voice loop to actually get to a live body that could take 10 seconds to answer the question. And so as I put my comments in, my last comment was, maybe Honor Health should reach out to the Arizona State Retirement System to understand a fantastic call center and see how they do it. Now, I don't know whether they will or not, but my frustration was how long it took me always to get through any of that and to actually get a live body. And so we'll see. I'm curious to know if they take my advice. Probably not. So any other comments?
I was on the retirement board over 25 years ago, and customer service was a big issue and a big goal that people had. And it's interesting to see that it's still one of the top priorities that people are looking at, to serve the members that we have and to go out of our way to provide services. So your point on a call center, so somebody can call in, get an answer in a couple of minutes. And when you look at the world we're in today, that doesn't always happen. People have to call back 3 times but I think it's all because of customer service. When Paul first came on and when he's still on the board, on the ASRS giving direction, he's always made that a top priority.
Well, it's very clear. I mean, it's because it is, and we have the data to show it and back it up, which is also amazing each time we meet. So any other questions or concerns?
Mr. Chair, this is Sarah Weber. Yeah, I just want to echo your sentiment and perspective. I agree. I think we're on a positive trajectory. The agency has done a great job of implementing continuous improvement year over year, and we've been able to see the benefits and the results of that. It's so great to be a fully, to have our board, have everyone here, have our new returning members. I think that's a huge boon for the system, and for our sustainability as a board. So yeah, really, I feel very positive overall, and I think that's reflected here in our summary.
Thank you. Any other comments? If not, I will close with just one. I would ask board members to keep the trustees evaluation input summary comments available. And I think in my mind, a good point for us would be basically in about 6 months for us individually to look at and say, are we doing what we say, or are we doing, especially, what critical issues need to be addressed by the board in the future? Are we addressing them? Use this as a reference tool more than anything else. Because I know as we get busy and move forward, we don't always remember all of that. And so, if I put this on my desk and every so often I pull up a folder and look at it, I'll go, yes, or maybe no, I want to bring this up or whatever with a concern. And I think that's a way that we can, as a board, potentially constantly improve as well, just by kind of double checking ourselves. So it's just a thought, and I would just encourage people to use it as a reference tool is all. So, okay. All right, without any other additions, where am I at now? We are at agenda item number 14, which, yes, I need to ask for a motion to go into executive session. Is there a motion?
Mr. Chair, I move the board go into executive session for agenda item 14 pursuant to ARS 38-431.03A1 for the purpose of discussion of the director's annual review.
Is there a second?
I second that. Chuck Essex.
We have a motion and a second. Please call the roll.
Hearing a motion by Mr. Connolly and a second by Dr. Essex, I'll take a roll call vote for the motion to move into executive session as stated. Please answer aye or nay when I call your name. Mr. Miller,
Aye.
Ms. Weber,
Aye.
Mr. Connolly,
Here.
Dr. Essex,
Aye.
Mr. Petkunis.
Aye.
Ms. DiMaggio, Reese, Ms. Landis, and Mr. Dean are all currently excused. Chairperson Miller, the vote has been taken.
Motion passes. We'll go to executive session.
The time is 10:08. We will now move into executive session. Ms. Weber, Mr. Petkunis, you guys should have received an email from me with that executive session information. We'll see you in there, okay? We are ready for you to call the open meeting session back to order when you are ready. After you call the open meeting back to order, I will take the roll call vote to ensure we still have a quorum.
This time I'd like to call public meeting back to order and please call roll.
For the record, will the following trustees please confirm they are still in attendance at the meeting by stating here as I call your name? Mr. Miller,
Here?
Ms. Weber,
Here.
Mr. Connolly,
Here.
Dr. Essex,
Here.
Mr. Guillen,
Here.
Mr. Petkunis. Right, and then Ms. DiMaggio Reese and Ms. Landis are excused. Chairperson Miller, quorum is present.
Thank you. I'd like to entertain a motion regarding agreement for the director.
Mr. Chair, this is trustee Petkunis. I'd like to make a motion. With respect to item number 14 in the director's annual review, I move to approve the agreement that was discussed and amended in the executive session that we just had.
Second. We have a motion and a second. Please call the roll.
Hearing a motion by Mr. Petkunis and a second by Mr. Connolly, I'll take a roll call vote for the motion to approve the amended employment agreement of the executive director as stated in executive session. Please answer aye or nay when I call your name. Mr. Miller,
Aye.
Ms. Weber,
Aye.
Mr. Connolly,
Aye.
Dr. Essex,
Aye.
Mr. Guillen,
Aye.
Mr. Petkunis,
Aye.
and Ms. DiMaggio Reese and Ms. Landis are excused. Chairperson Miller, the vote has been taken.
Thank you. And since there's nothing left on the agenda, we're adjourned.